Today, I want to talk about how multiple billionaires are now going after short sellers. It's not just Donald Trump, but it's also Richard Branson as well. I want to explain how these shorts are so over-leveraged and why they're petrified. So stay tuned and let's make some money. Later in the video, I also want to go through the 95% runner we just nailed in the Millionaire Mindset Trading Group, and that was MLEC or Molex Science SA. But now I'll dive straight in with the key information. So, we can see that Meta News has tweeted that another billionaire has entered the fight, a spokesperson from Virgin Galactic. So Richard Branson has said that our stock price has seen a dramatic decrease, which the company is currently investigating for any illegal naked shorting tactics by hedge fund managers. Meta News added saying the SPCE or Virgin Galactic short float rose 10% this month to 25% of the float shorted. That was also followed by a drastic decrease in the company's share price, which the insiders and Richard Branson are attributing to naked short selling. But as I said and as I touched on in my previous video, it's not just Richard Branson. Actually, Donald Trump himself has spoken about the short selling.
Started because of, I hear the shorts are working, they're working so hard, but shorts can get hurt very badly. Just remember though, we have great cash. We have a thing that's not very expensive to run. We have the best engineers in the country. Will you raise?
So as you could hear, Donald Trump said the shorts are working very hard, but the shorts can also get hurt very badly. And then said DJT has tons of cash on hand and a successful business, which reminds me very much of AMC. AMC has been growing revenues and profits or EBITDA year over year for the last few years and has over $1 billion of cash on hand. They're also currently in the process of refinancing that debt to push that maturity out further in time. By doing so, AMC will be able to renegotiate that debt, so they won't have to repay the debt in 2026 and they'll get a more beneficial interest rate. That will further decrease AMC's interest expense, only further increasing their EBITDA further. You may have also seen the Trump media CEO's message to Wall Street regarding its naked shorting, saying you aren't going to screw with us and we are going to come after you. So again, it seems DJT, Truth Social, the Trump Media Corporation is very much intending on pursuing these short sellers. And maybe so is Richard Branson and SPCE as well. And potentially Elon Musk is also jumping back on the bandwagon as well, just a few days ago tweeting saying that it's time to make crime illegal again. For too long, financial crime has been allowed to completely fly under the radar, with these big hedge funds, institutions and banks just receiving tiny fines. They've been manipulating markets and they've been stealing from market participants like other funds, other institutions and of course retail investors for their own benefit. And a prime example of how they do that, as Matrix tweeted, he said, remember when Virtue's CEO, Doug Sifu, said if we get an order for 1,000 shares, but there's only 200 available on the market, we will still fill that order. This obviously comes from Doug Sifu's infinite liquidity speech, where he said that as a result of this infinite liquidity, if there's only 200 shares available to sell in the market, Doug Sifu and these market makers will still fill that order. Using their bona fide market making exemption, they're allowed to create synthetic shorts to fill any buy or shorting order. But of course, there's a clear difference between using that exemption for bona fide market making reasons and using that exemption for manipulation. There's a big difference between filling an order for market liquidity purposes and stealing from other market participants. Also guys, I wanted to go through MLEC or Molex Science SA, the fast moving momentum news play we had in the Millionaire Mindset Trading Group. In the early hours, MLEC released some news which was caught by our automated news scanning bot, which is where some of the members jumped in, but other members jumped in later at the break of $2.50. The reason why it was over $2.50 is because $2.50 was the pre-market high, which then gave us the first pullback, which we then broke later on in the pre-market. The run from when the news was released was a total 96% run, and even getting in at $2.50 led to a 32% run. Freakdeline jumped in at $2.22, selling at $3 for over 35% gains. So guys, if you want these kind of gains that happen every single day in the Millionaire Mindset Trading Group, be sure to join using the link in the description below. Now you'll also remember in one of my previous videos, I spoke about how short sellers like John Hempton were trying to convince you to sell a stock you've bought at the lows and instead buy a stock they're holding at the tippy top all-time high price. Typically, the best way to invest is to buy low and sell high, not buy high and sell low. John Hempton told you to buy Nvidia at its tippy top all-time high price just before a now 20% drop. John Hempton was saying you should sell your AMC shares to buy Nvidia. Nvidia has been going up all year, whereas AMC hasn't. Therefore, you must sell now. Of course, John Hempton was just trying to talk up his book, or basically trying to dump his position in Nvidia to you guys. Again, just another prime example of how the short sellers tried to convince you to sell good investments to instead buy bad investments. Or more specifically, just to desperately sell shares that they need to close out of their short positions. Now, the reason why these hedge funds are desperate for your shares is because they're so over-leveraged. So let's talk about just how over-leveraged they actually are and show you the proof. Well, Kristen has tweeted about how global hedge fund borrowing has just risen to a 5-year high in the week to April 19th. It says banks give hedge funds leverage, essentially a loan to fund investing, which amplifies hedge fund returns but can also increase losses. It says gross leverage, or total borrowing, reached 270% after rising 2.6 points from the prior week. aka every hedge fund out there, on average, is borrowing at least 3 times their actual equity base. aka if a hedge fund has $10 billion, they're using a total of $40 billion, $10 billion of their own and 30 borrowed to short stocks. Some hedge funds out there like Citadel use a larger leverage ratio, not just 270%, but over 700%. And that means that if a stock or if their portfolio moves 25% against them, their entire portfolio is liquidated. Or at least should be, unless these hedge funds are receiving margin call waivers, like what happened back in January of 2021. But ultimately, the longer these margin call waivers persist for, the larger the explosion. Because ultimately, these margin calls can't be waived forever. The Fed, the SEC, the DTCC, FINRA couldn't waive margin calls back in 2008 and won't be able to waive margin calls this time round either. Back in 2008, even some of the largest banks like Bear Stearns and Lehman Brothers ended up failing. The Fed couldn't waive the margin calls of Bear Stearns, and they couldn't waive the margin calls of Lehman Brothers because the problem was just too large. Yes, a small problem like a 1 or 2% failure can be ignored, but a large problem like a 10, 20, 50 or 100% failure cannot be ignored, and margin calls have to be executed. So ultimately, the longer these margin calls are waived for, the bigger the explosion, the bigger the market crash, and the bigger the squeeze. So guys, be sure to let me know what you think down in the comments below. And as always guys, be sure to ding that notification bell, because that way you'll be alerted when I upload a new video. Cheers.